Micron just reported their latest quarterly figures, and at the time of making this video, the stock is down 12% to now $91.33. At the start of this year, Micron stock was trading at $85.34, which is quite strange that we're still that close since, well, the business has grown quite rapidly since. It will have a market cap of just over $100 billion. Forward PE still sits quite low in my opinion, just under 12 times. If you look at what the analysts are expecting this company to do in fiscal 2025, which is the fiscal year that this company is in right now, and fiscal 2026, you can see that this is still a very, very fast growing company. But in fiscal 2027, analysts are expecting sales to drop and EPS as well. In 2026, HBM4 is expected to ramp up. And as we did in a preview video, we will look at the average analyst price target that currently sits at, well, 40% higher than the price the stock was when the market closed. Now it's going to be a bit higher than that, but I do think that we're going to get a couple of downgrades tomorrow. And I'll explain all of that in this video. I think we're going to see some short-term pressure. Yes, even more short-term pressure than what we've seen before. Plus, of course, we've had Jerome Powell talk, less rate cuts in 2025, all the market went down. So yeah, definitely not the best day to report. Definitely not the best day to report a double beat, but a huge miss when it comes to guidance. That's unfortunate. I had a small position going into this earnings report. I thought it would be a good trade. No, apparently not. Anyways, let's discuss all of these results in today's video. If you enjoy this type of videos, leave it a thumbs up, subscribe. If you have not, we really appreciate that. If you want to support me even further, do check out the link down in the description and in the pinned comment with the top 10 best stocks to buy now, or go to fool.com/couchinvestor. Thank you very much. So let me start by saying that they beat the expected number for revenue for this quarter and, well, free cash flow as well. Free cash flow was expected to be negative $155.4 million. I believe it was positive 110, 120 or something like that, so fine. But guidance for next quarter revenue was closer to, well, $9 billion, $8.96 billion. That came in, well, much lower. And so they said the following: data center revenue grew over 400% year over year and 40% sequentially, reaching a record level, with the data center revenue mix surpassing 50% of Micron's revenue for the first time. We delivered record revenue in data center SSDs and achieved new records in market share for data center SSDs and overall SSDs. Our high bandwidth memory or HBM shipments were ahead of plan, and we achieved more than a sequential doubling of HBM revenue. Revenue from our largest data center customer was approximately 13% of total company revenue, and in 2028, they expect HBM total addressable market to grow 4 times from the $16 billion level in 2024 to exceed $100 billion by 2030. On the more negative side of things, they said the following: leading edge DRAM supply remains tight, driven by robust demand in data center DRAM, including HBM, which will underpin our business results throughout fiscal and calendar 2025. We had previously shared our expectations that customer inventory reductions in the consumer-oriented segments and seasonality would impact Q2 bit shipments. We are now seeing a more pronounced impact of customer inventory reductions. Fiscal Q2 bit shipment outlook is weaker than we previously expected. We expect this adjustment period to be relatively brief and anticipate customer inventory reaching healthier levels by spring, enabling stronger bit shipments in the second half of fiscal and calendar 2025. We are on track to achieve our HBM targets and also deliver a substantial record in Micron revenue, significantly improve profitability, and positive free cash flow in fiscal 2025. A quick comment from the CEO: Micron delivered a record quarter and our data center revenue surpassed 50% of our total revenue for the first time. While consumer-oriented markets are weaker in the near term, we anticipate a return to growth in the second half of our fiscal year. We continue to gain share in the highest margin and strategically important parts of the market and are exceptionally well positioned to leverage AI-driven growth to create substantial value for all stakeholders. Remember, HBM is sold out for the whole of 2025, but pricing for that was already determined before, so the price hikes will not affect those orders. They also say that they made excellent progress on HBM, more than doubling their revenue sequentially during the quarter and exceeding their plans as a result of solid execution on yield and capacity ramp. In fiscal Q1, HBM gross margin was significantly accretive to both DRAM and overall company gross margins. We are proud to share that Micron's HBM3E8H is designed into NVIDIA's Blackwell, B200 and GB200 platforms. Micron's HBM3E operates at full speed while maintaining leadership in power efficiency. This month, we commence high-volume shipments to our second large HBM customer and will start high-volume shipments to our third large customer in calendar Q1, expanding our HBM customer base. And so the figures, the numbers for the quarter on a GAAP basis were this. Revenue 8.7, just over $8.7 billion, gross margin of 38.4%, operating income of $2.17 billion as a percentage of revenue, basically operating margin 25%, net income $1.87 billion, and diluted earnings per share of $1.67. Now, all in all, you've got here the split between DRAM and NAND. DRAM much better than NAND here, $6.4 billion, representing 73% of total revenue. That revenue increased 20% quarter over quarter. Bit shipments increased in the low double-digit percentage range quarter over quarter, and ASP increased in the high single-digit percentage range quarter over quarter. As for NAND, revenue decreased 5% quarter over quarter. Bit shipments decreased in the low single-digit percentage range, and ASP also decreased in the low single-digit percentage range quarter over quarter. They said the following: in fiscal 2025, they expect Micron's revenue mix with companies headquarters in mainland China and Hong Kong, including direct sales as well as indirect sales through distributors, to be approximately mid-teen % of their worldwide revenue. This mix is impacted by market factors described earlier, as well as by the China CAC actions announced in May 2023. Now, all in all, we are now at, record revenue for the company, of course, thanks to a huge increase in DRAM revenue. And like I said in the previous Micron video, I think, yes, this is still a cyclical company, this is still a cyclical industry, but I do think that this time the cycle will be much higher, the top will be higher than before. There will be some short-term volatility, like we've seen. Sometimes they're going to miss, sometimes not. But I do think that the top will be higher than before. And then, of course, since this is a cyclical business, I do expect it to slow down. I don't know when. The market, some analysts are expecting this to happen in fiscal 2027 already. I think that will be a bit too early, especially if we have some delays. As for the different business segments, you've got compute and networking, the largest part here. Mobile revenue did take a hit quarter over quarter. That's quite weak. Storage is up a tiny bit. And then you've got embedded here, is basically down as well. All in all, if we look at cash flow and capital allocation, they generated $3.2 billion of cash flow from operations at 37% of revenue. Net capex was $3.1 billion, so the difference here is basically free cash flow, and that's free cash flow positive. So adjusted free cash flow of $112 million. They did not buy any shares during their fiscal Q1. Maybe now with the big drop, maybe they might do so. They are paying a dividend of 11 cents that will be paid on January 15. As for demand outlook, so they see industry DRAM bit demand growth to be in the high teen percentage range in calendar 24 and in the mid-teens percentage range in calendar 2025. They see overall calendar 2025 DRAM industry bit supply growing roughly in line with bit demand, with tightness in leading edge nodes driven by HBM supply ramp in the industry. Their outlook for industry NAND bit demand growth in both calendar 24 and 2025 is now in the low double-digit percentage range, which is lower than their prior expectations. Key drivers include slower growth in NAND content in consumer devices, ongoing inventory adjustments, and demand dynamics in different end markets, as outlined earlier, and a temporary moderation in near-term data center SSD purchases by customers after several quarters of very rapid growth. In the next few years, we also expect high-capacity NAND SSDs to start displacing capacity HDDs in the data center, an inflection that will drive long-term NAND demand growth. As for supply, so what are they doing? Well, since NAND technology transitions provide a significant increase in overall bit output, the pace of technology transitions will also need to slow in order to align supply to industry demand. We have reduced NAND capex versus prior plan and have slowed the pace of technology node transitions. In addition, we are reducing NAND wafer starts by mid-teen percentage versus prior levels. They also expect Micron's worldwide revenue related to LP4 and D4 DRAM products for the remainder of fiscal 2025 to be approximately 10%. They expect Micron's sales of products to China headquartered customers to be concentrated in the high end of customers' portfolio, leveraging our technology and product leadership and the performance and quality requirements of our customers. And so, if we look at outlook revenue, basically a miss of, well, $1 billion, because revenue is expected to come in at $7.9 billion plus minus $200 million. Gross margin 37.5% and diluted earnings per share around $1.26 on a GAAP, $1.43 on a non-GAAP basis. We expect DRAM bit shipments to decline sequentially and expect a meaningful sequential decline in NAND bit shipments for reasons mentioned previously that are impacting near-term demand. We project our bit shipments to resume growth after fiscal Q2 and expect second half fiscal year bit shipment to be stronger than the first half. So basically 6 months from now, we should be seeing a, let's say, better picture for Micron. And so right now, looking at the stock after weeks and weeks or maybe months of staying around $100, we are going to go back down to around $90. As you can see, this is the uptrend line. If it wants to test that, that will have to go well under $90, closer to $80, $85 or so. We've been there back at the start of September. So who knows? Who knows what might happen tomorrow when the market opens? Let's see. All in all, this is still a very, very good company. But like I said, cyclical business. There is seasonality, some inventory issues as well. Maybe some delays here and there. So yeah, as you've seen, next quarter is not going to be great, but they expect the next 2 quarters after that, basically their second half of their fiscal 2025 to be much better. Okay, I guess right now the market is just not in the mood to wait another quarter or 2. Maybe it's an opportunity for long-term investors, me that just wanted to trade this name on the earnings. It's going to be quite interesting for me to get out of it tomorrow when the market opens. Hopefully not that much red, but then again, we've just heard Jerome Powell. We've just seen what the market's reaction has been. So I think tomorrow I'll probably be down my position 10+% or so. Okay, you win some, you lose some, you move on. So overall, that's all you need to know right now with regards to Micron. Do share your thoughts down in the comment section below. Like, subscribe, do all of that. And I'll see you all in the next one. Bye-bye.